In this video, we'll pose the question, what is Forex scalping, and even give a few suggestions as to how you can go about building a Forex scalping system. In order to understand what it is, you need to understand what the actual term scalping means. When you are looking to scalp the market, you are looking for short-term trades, sometimes lasting just a few moments or possibly even seconds. So with that, you aren't worried about economic conditions or fundamental analysis. You are worried about places that you may or may not see momentum in the market. You're just looking for places to pick up a few pips. In order to be an effective scalper, you need to get in and out of the market rather quickly. This is because you are looking for a quick gain, taking advantage of those little pockets of illiquidity in the market, which do show up from time to time. They're basically spaces of thin air. Once you get good at reading charts, you can start to recognize supporting resistance, support, the micro support and micro resistance that also show up on the charts, which is probably more important for the scalper. So why would somebody become a scalper? Well, there's a multitude of reasons why they may do it, not the least of which is that it's much safer to be in and out of the market than it is to hang on to a trade. A long-term position could possibly even lose money overnight as you sleep if you are hanging on, or for that matter, just a trade of a few hours. They're looking to pick up little bits and pieces of profit along the way. Many scalpers will point out the fact that they are simply small fish in a large ocean, referring to the larger institutions out there. In that sense, they are a bit afraid of going up against these large institutions, but also know that they have an advantage in the sense that they can get in and out rather easily. They're not putting so much into the market, so it's easy to take it back out. They are going to be much more nimble, both entering and exiting as a result. The thing about scalping, though, is it takes extreme concentration and discipline. It's not something that you just do on a whim. It takes concentration, and it is something that takes quite a bit of skill. Quite frankly, scalping is not something that traders should do until they have quite a bit of screen time in front of them. Having said that, you can always use a demo account as a great way to practice in real-life conditions. That is probably the most important piece of advice you will hear. Perhaps even more important, though, than the screen time is to have discipline when trading. If you're in a losing trade, you need to get out sooner rather than later. This is because if you are not quick to take your losses, they can compound rather quickly. This is because quite often scalping is done with larger positions, so therefore it can compound against you rather quickly. Speaking of which, you need to trade with the discipline to trade in manageable sizes. Remember, as a scalper, you're looking to trade a little micro movement, not something that is developing over the longer term, meaning that the slightest little deviation in monetary flow can cause issues for you, your position, and your account. The first ingredient of a decent scalping market is to find one with a small spread. So this is the euro dollar. Depending on your broker, most of them are about half a pip, maybe 3/10 of a pip. This is much better than trying to scalp something that, say, has a 7 pip spread. You could see how that might be a bit more difficult to overcome. You start -7 pips as soon as you open up the position. So there's a couple different little simple ways that traders will scalp the market. And needless to say, there's an unlimited amount of ways to do it. But sometimes simple is better. So what they'll quite often do is look for little brick walls. And brick walls are places where the market just can't seem to get past. So, for example, here is one right here at this price, 108.22. Now, the trader will notice this, and then they will wait for the market to break down below it. This is a 5-minute chart, so we're not looking for massive moves here. Once they break down below these 3 candlesticks, you can see that the market went as low as a pip lower, bounced back, and then made a bigger move. Now, where they take profit, they'll look for perhaps another brick wall. Like right here, for example. You can see that there was definitely a brick wall there. So they got a pip or two and then got out. Now, obviously, that's very tight risk to reward ratio. So they may do something like put a stop loss here and then aim for maybe a bigger area where the buyers came in and really took over since they're shorting. In that scenario, there's a multitude of ways they may look for it, but there are a lot of wicks through this area here. You can see that they eventually got that move. That's still only a 5 pip move. It's not a huge move. So keep that in mind. You are talking about little tiny movements. These little brick walls occur all the time. You can see that there's one there. And what you really like to see is something like this. You can see that there's 2 little wicks there, but there's 5 candles, in a row. And once we broke above it all the way over here, you can see that we shot up several pips. Well, think about it. If you have these marked on a chart, this 5-minute chart shows that you may have been waiting 2 or 3 hours for that to actually kick off. It's not necessarily something that happens right away. There's also something known as a round number phenomenon, a round number bounce, if you will. And a lot of times what traders will do is they will look for round figures. So in this case, we'll just put 1.09, and you can see this has caused a little bit of support. What they'll do is something like put a stop loss 5 or maybe even 10 ticks below, and then try to play for a bounce. You can see that you got a 10 tick move here. Took about an hour to get there. It's very quiet trading at this moment, obviously. But you see how this is an area that large institutions come in and they tend to pad these areas. At the end of the day, the most important thing is that you're going to need to trade in a manner that you're very comfortable with. If that's going to be the case, then there's a certain amount of psychology and comfort that's needed to be a scalper. And that's probably true with any system, but especially true with a scalping system. Even though, again, it's not a long-term trade you're setting up for, you may be waiting a while for that trade to set up. So while scalping is thought of as being really quick, it's not necessarily constant action. Rather, it is quick in and out when you are active. A lot of this is waiting for the right setup. So, in a bit of irony, some of the most patient traders are the successful scalpers, which isn't how it's presented, but that's the reality of the situation. Use a demo account, come up with ideas of your own, and make them your own. Make sure to test them, and then once you have enough confidence in the results, you'll be able to scalp the market as well.